GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's like a hug from your grandma when you're sad and your bags are down bad. I'm your host, Jay Hamilton, and today we're telling you what the F is going on and what's causing this crypto market crash. Is this panic time? Sell it all, or what should you do? TLDR, it's not panic time. Everything's good, everybody. Take a deep breath because we've got here to guide us legendary crypto investor Lark Davis. Lark, how you doing? How are your emotions today?
Doing good, doing good. It's been a wild few days in markets, and if you've survived this without getting like totally liquidated or whatever, congratulations, because this is probably one of the more significant market events that's happened in quite a long time. Last time I remember sentiment was this bad was probably the FTX crash or the COVID crash, and this was less extreme, but sentiment wise, pretty extreme.
Yeah, and that leads to a lot of panic and a lot of fear. So let's alleviate everybody's fears and everybody's panics and talk about what's going on here. So we have five main reasons for this crash and five things that are really setting this up. Lark, what are those five reasons? And then let's jump into each of them.
Yeah, so of course, Japan is getting everybody very worried. We have to break down that situation and understand what the carry trade is. US economic data is spooking the market. We have Trump apparently falling behind a bit in the polls, which is making people a bit economically less optimistic. We have what's happening in Iran right now. And of course, as crypto, we can't just let all the macro stuff happen. We obviously have to have our own specific catalysts of giant dumping happening from market insiders. So it's been a pretty crazy few days, catalyst wise. Perfect storm event. Apparently, Mercury's in retrograde, so what are you going to do?
Oh, that was a good one. That was a good one. Okay, let's start off with the Japan carry trade because Japan increased their rates by 25 basis points. No big deal, you would think, right? Like maybe a little bit of out of what we expected, but no big deal. And that seemed to be the tipping point that really caused this market crash. Can you explain to us why that is and what happened here?
Yeah, total effing chaos from basically what is a very small move, only a 25 basis point hike in the interest rates in Japan. But that caused panic because of what's known as the carry trade. So essentially, interest rates in Japan have been super low for a very, very long time. What traders have been doing, they've been taking yen denominated loans at basically zero interest rates and then going and buying US stocks and US bonds. Now, what happens when the interest rates go up? It sends panic through the yen markets. The yen versus the dollar collapsed hard. What does that do? That forces a bunch of people to have to liquidate positions because suddenly they're not making money anymore because the yen dollar pairing has broken, right? So these guys all need to get out. And so that's what they're doing. It's a massive deleveraging event that starts happening. Everybody rushing for the exits in Japanese markets, which means big pressure on US bonds, big pressure on US stocks, and of course, big pressure on Japanese stocks and the Japanese yen, which Japanese stocks are one of the biggest stock markets in the world. That index just had its, I think, worst 2 days ever in history and worst single day since 1987. Hey, pour one out for Japanese investors, man, because they had, if you were investing in the Nikkei index, it went sideways, well, down and then sideways for 30 years.
Oh,
And only a few months ago did it finally reach new highs by like 5 or 10%, only to crash back down to the basement, man. That's harsh. That's harsh being a Japanese stock investor. Holy cow. So that is a big event that's impacted the market a lot, right? Seems like a small thing, but it has massive reverberations around the world because you have to deleverage a lot of money that was leveraged up. I mean, there's big firms and hedge funds and stuff like that all across Asia, whether it be in Hong Kong or wherever, that have been running this carry trade, this yen carry trade, right? So Japanese investors have been super deep into this, and it's a lot of leverage to unwind. We're talking like, tens of billions, maybe more, having to unwind here. So it's a big event.
and that would explain why this event, which happened outside of crypto, nothing to do with crypto, also caused a large stock market crash. Now, a stock market crash is a usually a more manageable crash compared to a crypto crash. We are so much more volatile. Is there any future risk with the Japan carry trade, or is this now done and we can put this behind us?
I think there's future risk with basically everything we're going to talk about today because often what you see happen is there's a big initial spark, right? And what then happens is you find out who got hit, and that's not always immediately apparent. If we go back to like the 2022 crypto crisis, right? We started having different things starting to break. And it took us maybe 6 months or more actually. FTX was in November and things started breaking in like February. It took a long time to find out who was swimming naked. But there were a lot of players swimming naked, whether it was the big lenders, whether it was FTX, whether it was Genesis or others. We saw a lot of those things come to light, but only later when the calls started coming in, when the insolvency realities starting hitting and the bankruptcies started hitting. So none of that stuff happened off the initial spark of a market downturn or the initial spark of the deleveraging. Those things came later. So in terms of Japan, hey, look, maybe they pulled it off perfectly and no hedge funds are going to get taken out or any of that kind of stuff, but usually in these sort of events, you see that happen. And it doesn't happen immediately. We have to wait weeks or months for these things.
Right. Okay. So maybe some more bleeding still to come. I hate to say it, but that's the truth in these situations. Okay, let's go to the second reason why this happened, the US economy. What's going on there?
So the one thing that really spooked people in the US was a bad jobs report. So basically unemployment came in, it was expected at 4.1%, came in at 4.3%. Not huge, not a huge number, right? Total number of US jobs is actually up, right? Versus pre-COVID numbers. So there's 6 million more jobs or something like that. And if you look across different data, even the jobs, the unemployment report, even that, the lady who made this something called the SOM rule, which is basically when the US unemployment data hits over like a 24-month moving average, that generally signals that we're either in a recession or recession is coming like ASAP. Anyway, even she said, look, it's not perfect because we have illegal migrants that are potentially part of this number, or we had like this big hurricane in Texas. So their job reporting data was not completely accounted for, and they might have been quite good there. So there's different things to take into account here, but it's heading in the wrong direction, essentially. And it's making everybody in the market think that it's too little, too late for interest rate cuts. And that when the interest rates get cut, it's not getting cut because job well done. It's getting cut because holy crap, we have no other choice. Everything's going to heck in a hay basket here. So this is kind of what we're looking at right now. That jobs report is being looked at as sort of the canary in the coal mine that the US economy is actually weaker than it's currently being presented. And in spite of 2.6% GDP growth last quarter, which is crazy to think. We went from that GDP growth report dropping like a week ago, 2 weeks ago, to suddenly everybody's freaking out saying imminent recession, everything's bad. And of course, now we have the yield curve uninverting, which historically has signaled a recession as well. So recession fears are running high in the USA right now. Goldman Sachs, though, came out and said, well, we're going to raise our recession probability for the next 12 months from 15% to 25%. So one of the biggest banks in America, whether you can trust them or not, is currently saying, well, it's only 1 in 4 chance of a recession in the next 12 months. Everybody's kind of freaking out a bit too much about this. So whether we can believe the banks or our lion eyes and what's happening with the yield curve and all this other stuff remains to be seen. But that fear is definitely driving the downturn in the market. Everything has to happen at the same time. You can't just no, we can't just do Japan deleveraging. We have to also do US economic fears too. And all the rest of the stuff we're going to talk about.
Well, it's just more fun when you bring everybody to the party. I don't want to be at the party just with, alone. I want everybody there. So who else during the party is Trump, and Kamala is now even with Trump in the polls. What's going on there? That's obviously causing some more fear as well.
Absolutely. And not to get political, we'll just talk about the implications for crypto markets specifically, maybe the economy a little more broadly. Markets tend to believe that Donald Trump's going to be much better on the economy and that he's going to be much better for the cryptocurrency markets. Now, the mainstream media polls, I don't believe those for a second, but what you can perhaps take a little bit more stock in is the prediction markets. But now that all the big money knows that we're all watching the prediction markets over on Poly Market, maybe they're gaming that too. It's hard to say. But the prediction markets are showing Kamala picking up steam. And if we get Kamala Harris, the implication that a lot of investors are looking at is that she's not going to be great for the economy and that she's not going to be great for crypto specifically. So while we've had this broader sell-off over the weekend related to what's going on in the macro markets, this is also starting to weigh heavy on the minds of cryptocurrency investors. If Trump is not the next president, then that could have bad implications for where crypto goes. And I know Kamala's been trying to do like a crypto relations reset, but we have to look at the evidence of the administration and what the administration that she's a part of has actually done to crypto. And it's been the most aggressive administration you could possibly imagine, going after suing every major exchange in the United States. Operation Choke Point 2.0, trying to kill banking access to crypto exchanges and all this other stuff. So that's been part of her administration, which makes people think that even if she's now talking the talk, that she's not going to walk the walk later. Whereas, Trump wasn't perfect on crypto in his term either. But people are thinking, well, maybe now he's actually been orange pilled, and his vice president holds Bitcoin and he owns Ethereum. He sells NFTs. So maybe they're actually going to deliver and walk the walk. So that's kind of what the market's looking at right now in terms of how they're reacting to the polls and who could or could not be the next president.
Mhm. So, with those two factors or catalysts for this current crash, nothing has changed. The election is still in November. We still don't know who's going to win, right? And we still don't have a rate cut. And we still think it's very likely we're going to get a rate cut at the next event. But yet, the fear is causing all this panic, which is leading to all these sell offs. Just that it's important to always recognize, I think, and I think you agree with this, the what is actually fundamentally changed, which versus what is just causing fear and panic and some emotions to lead the markets to have a correction. Would you agree?
Yeah, absolutely. Absolutely. These markets are heavily emotionally driven. And you might think, okay, well, surely these giant institutions and hedge funds, they're all like warrior monks. But no, they're susceptible to the exact same things. They make the exact same dumb bets that we all do. They leverage up, they take risks, all this kind of stuff. And that all has implications when deleveraging comes.
Yeah. Okay. Let's go to the fourth factor catalyst here for this crash, which was the threat of war, which is obviously incredibly scary. What happened over the weekend there?
Yeah, so essentially what happened last week, you had Israel taking out some top leaders from Hamas and Hezbollah, including a strike inside of Iran itself, which obviously pissed off the Iranians. So they are now promising massive retaliation. And I've seen reports going back and forth all weekend about, diplomats from the USA and diplomats from the Arab countries all trying to fly in to de escalate the situation because nobody wants a wider regional conflict. That's good. Let's hope that those efforts bear fruits. I hope that we're not going to see any sort of massive retaliation. Probably you'll see a lot of what we've seen before, which is they'll escalate in their own ways, attacking bases or whatever. I don't know. We'll see. It's a volatile situation. And unfortunately, hot heads can prevail. You have a lot of very hardliners inside of, well, both these countries who are very much at odds with each other and not talking with each other. And the implication here, unlike, for example, Afghanistan, which wasn't a major oil producer, right? So when that war happened, well, Afghanistan, what are you going to do? Sorry about your bad luck. Whereas with Iran, if we have a major conflict brew up that actually turns into a wider conflict and drags in the major powers, we already see Russia shipping weapons in. What happens if America needs to get involved? The potential implications here. And look, I'm not an expert in the exact situation here. Okay. I'm just sharing with you guys what I've been seeing here. But the implication, if that is to happen, is that the Straits of Hormuz, right, where all the oil comes out, about 50% of the world's oil or 40% of the world's oil passes through there every single day. And Iran is one half of that. So they have 15% or something of the world's oil reserves, 15% of the approximate numbers here, right, of daily global production. So this could really hit oil markets. That could hit inflation, right? Inflation could spike back up, meaning interest rates could stay higher for longer because the job's not done yet. Again, big implications if things kick off there. Let's hope that cooler heads do prevail and we don't see these disruptions to the energy markets.
Yeah, no kidding. Holy jeez. Okay, crypto did play a small part in this crash. It wasn't just these four non-crypto catalysts that caused this. Our fifth
Mhm.
catalyst is a crypto catalyst. What happened on the crypto side?
Well, besides the massive deleveraging of open interest, we've seen billions liquidated over the last 72 hours. Part of that is just things deleveraging, both in terms of derivatives trading, but also on chain loans and stuff like that. Part of the reason why I unfortunately was forced to sell a little bit of my portfolio. It's funny because my liquidation levels were very, very low. And we didn't get even close to those, but just the paranoia and PTSD of what's happened in previous crashes said, you know what? Got to take the hit here, got to deleverage. I'll sleep a lot better at night. So we see huge deleveraging across the crypto space because of these kinds of situations. But then all this bad news, all this bad stuff happening at the same time. And in comes Genesis and in comes jump trading. Now, jump trading, they were a major market maker in crypto markets. They made a deal with the CFTC because of various bad behavior around Luna and the UST stablecoin and I'm not exactly sure on all the details, but essentially they were doing some bad shit. Okay. So, as part of their settlement deal, they agreed to shut down their market maker business. That means that they have had to sell huge amounts of crypto coins, reaching a peak actually over the weekend. Now they've sold $500 million or more of Ethereum, but a few hundred million of that was sold over the weekend. So over the past few weeks, they've started selling, but they rushed into the weekend, I guess, sensing weakness in the market and wanting to get out better prices. So they rushed in and dumped hundreds of millions of dollars of Ethereum into a very weak market, which of course sent prices going even lower, causing more cascading effect. Then in comes Genesis. Now, Genesis, these are the trading desk and market maker company from the digital currency group, which is the people behind Grayscale. This is one of their other businesses, which I'm not sure if they've sunsetted that business completely or not. But anyway, Genesis back in 2022 got in a whole bunch of trouble with a whole bunch of different things, risking everybody's money. And they had a bunch of money locked up from Gemini, for example. So Gemini customers from the exchange were lending out their cryptocurrency assets. Genesis was the counterparty to that. They were not using great risk management. A lot of money's been tied up for a lot of time. That money's finally starting to be redistributed back, but that's another billion and a half, something like that, injection of money into the market at a terrible time to be injecting that money into the market. So crypto, right? Not cash, but crypto coins getting back to people. So yeah, that had a bit of an impact as well. Probably the least impactful of the things we talked about was Genesis, but certainly taken all together, it's had a real impact on the emotional state of the market and the rush to deleverage.
Whew. Oh boy. Okay, so are we gonna make it? Are we okay, Lark? Is this panic time, or is this the end, or is this just another 30% drop or 20% drop in a regular crypto life?
We are going to make it. Crypto's not going anywhere. Okay. That's the first thing to understand. Look, if you've been overly leveraged, I hope you didn't get washed out. Okay. I had to make some tough calls in the last few days regarding my leverage positions. That's my own fault. Got to own up on that. Got a bit greedy, right? But, but if you've had cash sitting on hand, this has been a very interesting time to be acquiring, right? Historically, such massive fear events have been decent times to add to your positions, right? So that doesn't mean you have to go in or go crazy or anything like that. But overall, these kinds of heavily oversold conditions can be good opportunities for long-term holders, right? Long-term spot holdings can be a nice entry for you here with the caveat that we still have probably some economic damage to play out from all the stuff we've been talking about today. These things may not have resolved themselves, and US recession fears are probably only going to continue to heighten. So that could still weigh heavy on markets. So don't rush. Don't rush. One of the biggest mistakes I've seen over the weekend every influencer and their mom is out there saying, buy the dip, buy the dip, buy the dip, when there's very little strength showing in the market. Everybody's buying into weakness, catching those falling knives, piling into altcoins. Now, people I saw on Friday or Saturday morning say, oh, I'm going buying much of this altcoin. Then like 24 hours later, you're down 50% already, man. So you don't have to rush here, okay? You can wait for the market to start showing you some signs of strength again. All the majors, I think, at this time are trading under their 200-day exponential moving averages. That's not great, right? You want to see that recover quickly. You want to see a decisive recovery for that and to see a bit of strength build back into the market. So I know the temptation will be to rush for a lot of people to try to get back in as soon as possible. And these things can retrace pretty quickly. Go back and look at the COVID crash, right? That retraced pretty quickly, but that's going to require some big statements. We need the Federal Reserve to come out and say, hey, we see what's going on. We're going to, now intervene here. However, keep in mind that when the Federal Reserve set out on this path of interest rate hikes, the intention has always been to break things. It's been to cool everything down. That's the intent of this, right? The intent was for people losing their jobs, economic slowdown, all this kind of stuff, and some deleveraging. Has this been enough, or are we going to now face more dire consequences? There's a lot of moving parts, and everything we've talked about. Look how many moving parts there are as an investor, how many things you have to be paying attention to in the market. It's absolutely crazy. The long-term value investors will do well.
I love it, Lark. Thank you for your cool head in a time of challenge. And thank you for sharing your own struggle through this. I think we don't have enough of people. We're not all geniuses here. Even those of us who are in this every day, we all make mistakes, and you're not alone. If you had a tough weekend, don't worry, you're not alone. Keep your head high, keep your emotions on straight, and let us know if there's anything we can dive into more that you want to learn more about, that we can help with your investment strategy. Feel free to ask. We got Lark back on the show next Tuesday. So let us know, and we'll be sure to ask Lark then. Lark, thanks so much again for joining us today.
Thanks for having me on. Remember, guys, we're going to make it. Crypto's not going anywhere.
What are you most worried about with your crypto investments? Are you worried about interest rates? Are you worried about the US economy, about the upcoming election, about the threat of war in Iran, or about jump trading, Genesis, or other crypto black swan events? Let us know in the comments in today's show. At the same time, while you're at it, smash the like button, hit subscribe, whatever you can do to help us get more people to view the Milk Road Show only is going to help you, because we're going to onboard more people in a safe and responsible way. Thanks so much for listening, folks. Now, remember, none of this is financial advice. Investing in crypto is risky, and you should only invest what you can afford to lose. See you next time, and have a wicked awesome day.